Well, for years, experts have looked to the housing market as a catalyst to help a struggling economy.
But can the financial climate grow without the backing of a strong housing market? Joining us this morning, our financial consultant, as he does every Tuesday, Andy Barkate. Andy, thanks for coming in.
Thank you. Good morning.
And it's so funny when we talk about the housing market and the housing situation. It always seems like everything is backwards. They're saying when it's good, but it's not so good, or it's bad, but it's really not. It's always like two certain things. How can the housing market? How important is it to helping us recover?
Well, actually, depending on who you talk to, it's very important. And you're right, because a lot of people, you can almost look at it, what is it, the chicken or the egg that comes first?
Right.
Okay.
Do jobs have to get better so the housing market improves, or does the housing market have to improve so jobs improve?
Okay.
So,
all right.
I mean, really, you think about it, but the housing market is such a big part of our economy. It creates, many economists, I guess, estimate that it creates about 3.5 jobs per new home.
Oh, okay.
Now, and most of that's construction jobs, but there's a lot of ancillary jobs that the housing market creates also. If you think about it, back in the middle, about 05, 06, back when housing was in its heyday, there was about 1.6 million new homes being built annually in the country.
Oh,
Okay.
Well, now we're down to about 600,000, so we've lopped off about 1 million new homes on average per year. And that translates into about 3.5 million jobs. So that's a big number. It's a big number nationally. And those jobs are typically pretty high-paying jobs. So that takes a lot of money out of it. So it's a big push. It's a big driver in our economy.
So what's being done to help the housing market get back on track?
Well, there's a lot of things going on. I mean, the government is trying to put out different programs to help the bottom be found in the housing market. Interest rates are very low. A lot of programs are out there to help people actually that are underwater in their homes still refinance those homes and maybe create a lower mortgage payment, hence having more disposable income to spend other places and kind of help the economy that way. So far, those are somewhat met with lukewarm so far effects, but there's a lot of psychological effects about a bad housing market also. Remember when Alan Greenspan used to talk about the wealth effect?
Right.
You know, we feel better about things financially, so we're more apt and more free to spend our money.
That's right.
Right. Well, that also has a dark side to it, too. It has a negative side. When we don't feel as financially strong, we tend to pull back as consumers. Consumers are about 2/3 of the economy. So if we're spending less collectively, that just means the economy is going to have a tougher road ahead. And that's kind of what we're faced with.
That's right.
All right. Well, we're going to have you back next week and let us know what your predictions, whether or not they're coming through or not.
Let's hope so. And I'll try next week to be a little bit more positive.
All right.
All right, mark that down.
Positive.
Mark that down.
He's going to buy a couple
Positive.
of homes.
All right, very good. Thank you, Andy.